I just put $72,000 in 3 new stocks, and I'm going to be covering all 3 of these stocks in this video. Right now is a very good opportunity with the market stabilizing to find opportunities and pockets of the economy that are going to outperform the market. It's a stock picker's market, and these 3 stocks that I'm putting money into, I highly believe are going to outperform the market. So let's not waste any time. Let's line your pockets with some money. Let's start off with the first stock, which is going to be Costco. Costco right now is over $1,000, and they have earnings very soon as of close on Thursday. The market cap is $451 billion with a PE ratio that is pretty high. And I'm going to talk about why this PE ratio is actually very reasonable despite it being a little bit higher. That's obviously because of the EPS. And the reason why earnings per share continues to go up for Costco is they have an amazing business model. They have a very resilient membership model. Costco's business model actually heavily relies on membership fees. So rather than them making money on the food and the products that you're buying at Costco, they actually have like a razor thin margin. That's why Costco lines are pretty much out the door, is because the value that you get at Costco is absolutely insane. If you're an American trying to save money, going to Costco is amazing. If you have a big family, buying produce and products in bulk is obviously going to save you money. So Costco actually doesn't make any money practically at all on the food and products that they're selling. They instead make all of their money on membership fees. So the fee that you pay when you sign up and all the annual fees, those are actually the only profit that Costco actually makes, and it contributes significantly to its profits. The company actually boasts a very high renewal rate of 93%. Okay, so they essentially, it's pretty freaking crazy, but Costco is essentially genius because they're like a software business. Okay, they're not a software business, but they have software recurring revenue. So instead of them actually making like a small profit margin on all of the goods and things that they're selling, they actually just make all of the profit on membership, and then the rest, they operate the business at practically very, very little margin. So a recent membership fee increase, by the way, is expected to absolutely raise earnings per share a whole lot. So even a membership fee increase of like $5 or $10, that's all profit. It's completely all profit because they've already got the rest of the business figured out. They already have figured out operating costs. They figured out all the supplier relationships. They have figured everything out. So now it's like a pure play on membership subscriptions, which is 93% retention. Okay, so retention is very important. Now, one other reason why I am buying Costco hand over fist, bicep over tricep right now, and get a clear view of the bicep, is because they have e-commerce expansion. That's another reason why I'm buying it bicep over tricep, is because Costco's e-commerce sales have been substantially growing, and e-commerce sales have a higher profit margin because it's all digital. So you don't have to pay for like the storefront, you don't have to pay the rent, you don't have to pay the employee, pricing, salaries, etc. So looking at their e-commerce business, it actually increased 13% in April. This digital expansion complements its physical warehouses, enhancing overall sales and customer reach. So we see it happening with Amazon, obviously with Walmart going into more e-commerce. Now, Costco. Costco is freaking crazy. It might be $1 trillion company. These guys have really figured it out. For the first 35 weeks of FY or fiscal year 2025, Costco reported net sales of $180 billion, an 8.2% increase from $166 billion during the same period last year. So their growth story is insane. In Discord, what I'm doing is I was trading Target. When I compared Target to Costco, I realized Target has a very low price earnings ratio. Costco has a very high price earnings ratio. But Target, it actually has a lot of trouble in their business, and they're more of a value play right now. They're not a growth play, whereas Costco is actually a growth play. It's pretty wild because, when I think about Costco, I kind of think boring business, but this boring business is growing a lot. Year-to-date comparable sales rose by 5.9%, with the US segment up 6.8%, in Canada up 4.5%, and other international markets up 3%. When excluding the impact from charges in gasoline prices and foreign exchange, total company comparable sales increased by 8.1%. Okay, 8.1% is really good considering this is subscription-based revenue in a way, right? It's not an actual, well, I guess it is actual membership subscription. And this is what analysts are saying. Analysts anticipate Costco to report approximately $63 billion, up 8% year over year, which is in line with their growth, and earnings per share to be around $4.27, making a 13% rise over the same quarter last year. So I'm really bullish on Costco, and I think that right now we're trading at $1,018. If we look at the chart right now, I think that of course it's hard to sell puts on this stock because that would be a lot of capital. So not everyone can do that, and Costco does not have the best options. So I'm looking at Costco as a pure stock play, purely holding stock, and a rare time where I'm actually not using options at all. Just think that this is a good stock where I'm putting in some money right now, and the momentum looks very good, and it does look like we may hit some levels of all-time highs, maybe 1,080 to even upwards of $1,100, $1,200 per share in the next 6 to 12 months. So earnings is going to be a really huge factor, and we shall see what earnings brings. Now, in terms of another reason why Costco is good is because I know you guys follow a lot of people on YouTube. A lot of the channels that you guys are watching are the option traders that I have taught or have been my students. And I know a lot of my students are basically pushing more aggressive stocks, right? When you see a lot of Palantir videos, you see a lot of high growth stock videos. And I want to be a little bit different. And I want to let you know that defensive stocks are also sexy, all right? So have some defensive stocks. When I look at Costco, I think that recession resistance is the best thing about Costco. People still need to buy bulk staples and value during downturns. So Costco sales will be very resilient regardless of any tariff situations, any inflation concerns. In fact, higher inflation means people don't want to buy expensive goods. They want to save more money, ideally, when inflation is higher because you have less buying power. So you're going to be shopping at Costco even more. So Costco is an all-around just amazing bet on consumer staples, and it's a long-term play demand for essential goods like food, gas, and household goods. Let's move over into Sweetgreens. Now, my challenge right now is running. We're almost finished my challenge. So far, we're doing very well. We have made several trades. We made an Apple trade. We made an American Airlines trade last week. And then I made a Sweetgreens trade, and Sweetgreens is up actually right now to very interesting levels because in my portfolio, let me actually open up my Sweetgreens position right now on Robinhood. I have sold $13 puts. So what that means is, and there you go, guys, for anyone that ever had doubts, I just opened it up and it just refreshed. So it's hilarious. I've gotten the comment before. It's like, Henry, you have a fake account. What, are you kidding me? If I go to account right here, you can see my first and last name. Like, there's just no way I'm going to be able to click through all this stuff. But that's like for the one out of a million people that don't believe me at this point. At this point, right? So anyways, here's my account. But let's go to Sweetgreens, the Sweetgreens position that I have. And so what I'm going to show you on Sweetgreens right now is I have sold $13 puts, and that's the level where I think Sweetgreens is very good. Now, I was hoping to get assigned Sweetgreens, and it is running today. But yeah, I am actually, I want to sell some more put options and get more Sweetgreens. This is a stock that I think I'm very excited to own. Let's just talk about the technical analysis a little bit on Sweetgreens. Let's go to the chart right now. I'm going to tell you about the technicals, and then I'll go over the business as well. So Sweetgreens has been in tough technical waters, right? But I have just begun to say it's a good buy now for the very first time ever in history. And that's because Sweetgreens right here, I think it sold off to some levels that just really not been seen before. I mean, like literally it has not been seen before. So if I go to the 1 year chart, these are literally levels that have not been seen before. Like I'm not even joking here. This is literally a 52-week low, right? So at the valuation that it's trading right now, given that they are still planning to grow many stores, I mean, you would be nuts, I think, not to have a little bit of money in this play. If I go to the valuation, I want to show you on the summary here. The PE ratio it's not there because they're losing money. They actually lost, I think it was $27 million. But that's kind of normal because they're expanding a lot and they're trying to open up many more stores. So they have like 300 stores or so last time I checked, and their goal was to get to over like 1,000. So Sweetgreens has a whole lot of strategic expansion plans, which I think is great because the more stores you have open, obviously the more revenue you have, and then they get more brand awareness, etc. So Sweetgreens is entering into new markets as well, Sacramento, Phoenix, Cincinnati, as part of their 2025 growth plan. And the company plans to open at least 40 new locations this year in 2025. And what I also like about Sweetgreens is they have this, what they call infinite kitchen technology. Okay, so they come up with some technology here. The infinite kitchen system automates assembly of salads, grain bowls using a conveyor belt mechanism that dispenses ingredients into bowls as they move along the line. So it's kind of like when you play those arcade games and you add in like a $2 or whatever. They're scams, right? most of the time. It's like a conveyor belt that goes down, picks up a toy, and then at the very last second, the toy slips through, right? Except this is kind of not a scam, and they're actually having like machines and infinite kitchen technology, like doing some of the work, so you have less labor cost. And of course, labor cost is a very massive part of the food business, because you have these workers there all the time. And what I like about Sweetgreens is they're doing the whole entire salad on premise, right? They're not getting in like the frozen goods or something. They're actually like delivering fresh ingredients. And yeah, these salads are expensive and they're niche, but niche is good, inexpensive is good. We don't need to tailor to everyone. I certainly don't believe, Sweetgreens is in the business of more niche, more of that professional person that values health and is going to pay a little bit of a premium for a salad versus, Chipotle is a bit cheaper. To me, it's negligible, but also Chipotle can be healthy depending on what you get. So anyways, I think that Sweetgreens has a good business, and this infinite kitchen technology is going to lower labor costs. That's why I'm putting money into this business. And in terms of their cost of goods sold, they're going to go down. So, that's a good thing, right? The cost of goods sold are going to go down. All right, let's talk about the next business, which is going to be Hims. I actually got an email here that I just loaded up. I got it 8 hours ago, 4 a.m. here, but I'm in Europe. But I got this email from QuantCider, and by the way, they have a free trial. It's in the description. It's absolutely free for 7 days. You don't like it, you don't pay for anything. I am paying for it. I like this software, and I personally am recommending this software, and I am following these stocks here: Tesla, Google, Palantir, SoFi, Target, Hims. And I got an email today essentially saying that Hims, they've had some insider selling. They've had a bit of insider selling, and it's interesting because at the time of this insider selling, right, we see the chief operating officer, the chief executive officer selling shares and selling a good amount, like $1 million here, 750. And it's interesting because at these times is actually the same times that Hims actually ended up peaking. So I wonder myself if these insiders are basically cashing out at the peak of Hims. But what I think is interesting is it has already sold off. So insiders have sold here, okay, and they were right, because Hims ended up going down a whole $10, which is a lot, because you go down from 64 down to 52, that's $12. That's a lot. Can you imagine? You got 64 grand, now I have 52 grand, for example, if your portfolio was, 64 grand was in Hims, right? So now the level that it's at, I'm now excited. I'm now excited to get into Hims, and I'm going to be buying some shares, and actually sold put options in my Discord community today, because I have my calls Mondays and Wednesdays. So you can always check that out. It's going to be in the link in the description as well. I'm doing my live coaching calls, and these are the 3 stocks that I'm buying. These are the 3 stocks that I'm getting into. Let me talk a little bit about Hims and why I'm buying it. I like that Hims has a really good target demographic, which is essentially a whole lot of issues in America, right? And one of them, and they, by the way, they also target men and women separately. And I like that because they're capturing in both demographics, right? When you look at beauty products only capture in more of the woman's interests, where you look at man versus women. Women spend a lot of money on beauty and stuff like that. So I like that Hims is catering to both. And, it's a US-based telehealth company. They were founded in 2017, and they have a lot of prescription medications and over-the-counter products and personal care items that are going to be bought a lot. First one being sexual health. Okay, so men, guys, and it's crazy. And I can tell you this, but erectile dysfunction, it's very common in America, even amongst young guys. And I've had it myself a lot when I was younger, actually. So there's different reasons for erectile dysfunction. But yeah, it's a very common issue, especially right now. Older men have it, younger men have it. And Hims sells sexual health sildenafil, which is Viagra, and tadalafil, which is Cialis. And yeah, they're selling a lot of this type of stuff. And by the way, tadalafil, Cialis, and Viagra is becoming pre-workout. People just take these drugs pre-workout now because, people are like crazy about the gym. And obviously there's like an epidemic or whatever. Young people using steroids, etc. So yeah, you look at that part of their business. I'm very bullish on it. Also, they have some women's products addressing sexual wellness and like low sexual desire for women. Now, hair care. So they have minoxidil, finasteride, and some biotin supplements. Minoxidil I should be using myself. I go a little bit more bald here, losing some hair. Then again, I don't care that much. I care, but I'm not using minoxidil. But anyways, I probably should, and a lot of men should. Male hair baldness is pretty common amongst most males, a majority, I would say. Finasteride, a little bit stronger of a drug, which can actually impact testosterone levels and actually cause erectile dysfunction as well in some rare cases. So when it comes to the hair care part of Hims business, I'm bullish because people are losing their hair, and that's very important. The SMV, or the sexual market value of men, a big part of it is hair. So I mean, not having hair will lower your points on the attractiveness in most cases, right? So, I mean, for women, Hims has, also minoxidil and volumizing shampoos. They have mental health stuff, right? So they have some mental health drugs. They have weight management drugs. So obviously weight is an issue in America. It's becoming an issue amongst a lot of Western countries, and Hims has that. They're really addressing the most common stuff. Dermatology as well, acne, anti-aging, creams and stuff, skin health, and including tretinoin, if I'm pronouncing that correctly, creams. I'm not familiar with those, but they have a whole lot of hair, skin, all kinds of stuff that's very important. And I know how much people spend money on this type of stuff. And then they have all their melatonin, collagen for skin health, and immunity boosting gummies. Anyways, Hims sells a lot of stuff, so they're kind of like a niche player when it comes to like getting some of the market share for over-the-counter medications. And they're also subscription models. So their subscription model is, again, genius because it's all about monthly recurring revenue. All right. By the way, in my coaching, I don't charge monthly recurring revenue. So I personally think the people that are charging $100 or whatever for their Discord is kind of lower quality, whereas I don't do that because I just want to get someone in, teach them everything I know, and that's it. And that's the honest way, in my opinion, of coaching someone. So, but as you can see, every other business wants a subscription. Every business wants a subscription. It's because the lifetime value of a customer is very high when you get a subscription. And the sellability of a business is also very high when you get a subscription. Because if you have a subscription, even if it's $100 a month, like many of the Discord competitors that I have, that many of them were my students to begin with, but if you sell $100 a month on a subscription basis, then it does add up, even if you have a higher churn rate, and even if half the people get off. I mean, half is high, right? Like we saw, it's 93% retention for Costco. I actually don't know what it is for Hims, but I do know that subscription in general, when you sign up for a health thing, it's usually going to be for a long time. So you're going to continuously get your skin care, your hair care, etc. Because minoxidil, you're taking it for forever. As a man, you started, you take it for basically forever, as long as you have hair, right? So their subscription model is pretty genius, and every business wants a subscription because many months add up, and many people are not willing to dish out one-time fee for something. They're happy to pay a small monthly price, but then that small monthly price adds up to a lot. But it's easier for people to manage their cash flow. So of course, when you're getting something on a subscription basis, it is easy to deliver because it's a low cost monthly. But I kind of think Hims gets you there, and I like that because obviously the business is making lots of money. Just like SoFi, it's the same. Like you get a credit card, you're there for life. Anyways, I think that these three stocks are going to make money. I personally am investing in all three of these stocks, and these are the stocks that I'm trading in my Discord community. So if you're interested in becoming a member of my Discord community and seeing me buy these stocks live and all the options I'm doing, I'd be happy to have you. Either way, thanks for watching this video, and I will see you in the next one. See you later.